Based on the historical data and forecast, Bitcoin shows a clear upward trend, consistently breaking through resistance levels. The RSI indicates that the asset is currently approaching overbought territory, but the forecast suggests continued momentum. Considering the support price of $90,200 and the recent price action, I recommend a long position strategy. We will enter a long position at $90,600, placing a stop-loss order at $88,800 to mitigate potential downside risk. The initial target price will be $93,700, aligning with the forecast and the upper Bollinger Band. To refine this strategy, we'll incorporate the Bollinger Bands and RSI. When the price touches the lower band and RSI falls below 30, we will enter a long position at $88,800 with a stop loss at $85,300 and a target price of $93,000. If the price reaches the upper band and RSI exceeds 70, we will exit the position. This layered approach, combining trend analysis, RSI signals, and Bollinger Band dynamics, aims to maximize returns while managing risk effectively, ultimately targeting a profit of $93,700. Based on the historical data and forecast, Ethereum shows a clear upward trend. The price has consistently broken through resistance levels and the forecast indicates continued growth. The RSI is currently fluctuating between 47 and 61, indicating a neutral to slightly bullish momentum. Considering the recent price surge and the forecast, I recommend a long position. Entry price should be $3,100. A stop loss should be placed at $3,030, just below the support level, to protect against potential downside risks. The initial target price should be $3,250, aligning with the forecast for January 11, 2026. To further enhance the strategy, we can incorporate the Bollinger Bands. The price is currently near the upper band, suggesting a potential pullback. If the price retraces to the middle of the Bollinger Bands, around $3,150, it presents an opportunity to add to the position. The second target price should be $3,220. The strategy combines RSI and Bollinger Bands to maximize profit while minimizing risk. The overall portfolio will be 60% long Ethereum, 20% in stable coins, and 20% in other cryptocurrencies. Based on the historical data and forecast, XRP shows a clear upward trend. The price has been consistently moving higher, breaking through the resistance level of $2.18 and reaching $2.1. The RSI indicates that XRP is currently in an overbought condition, with a value of 62.7 on January 4, 2026. However, the forecast data suggests continued upward momentum, with prices expected to reach $2.2 by January 11, 2026. Considering the Bollinger Bands, the price is near the upper band, indicating a potential pullback, but the overall trend remains bullish. Therefore, I recommend a long position with an entry price of $2.01, a stop-loss price of $1.9, and a target price of $2.2. To maximize returns and mitigate risk, I propose a portfolio strategy combining RSI, Bollinger Bands, and support/resistance levels. Initially, enter a long position at $2.01. If the price retraces towards the support level of $2.03, consider adding to the position. The stop loss should be set at $1.9 to protect against a significant downturn. As the price approaches the $2.2 target, consider taking partial profits to secure gains. If the RSI falls below 30, indicating an oversold condition, consider entering another long position with a lower entry price, a stop loss slightly below the support level, and a target price near the previous resistance level. This dynamic approach allows us to capitalize on both upward momentum and potential pullbacks, optimizing returns while managing risk effectively. Based on the historical data and forecast, BNB exhibits an overall upward trend, supported by consistently breaking through resistance levels and a positive forecast for the next week. The RSI consistently stays below 80, indicating that the asset is not overbought. Considering the forecast price reaching $927, I recommend a long position strategy. We will enter a long position at $883, placing a stop-loss order at $878, just below the recent support level. The initial target price will be $895, aligning with the first forecast price. To enhance returns, we will implement a trailing stop-loss strategy. Once the price reaches $895, we will move the stop-loss to $886, the established support level. Subsequently, we will set a second target price at $898 based on the forecast. If the price continues to rise, we will adjust the stop-loss accordingly, maintaining a protective buffer. This combined RSI, Bollinger Bands, and forecast-driven strategy aims to capitalize on the upward trend while mitigating potential losses, achieving high returns for our portfolio. Based on the historical data and forecast, Solana shows a clear uptrend. The price has been consistently making higher highs and higher lows, with the recent surge to $134 confirming this momentum. The RSI readings have been fluctuating but generally trending upwards, currently sitting above 50, indicating strengthening bullish sentiment. The Bollinger Bands are widening, suggesting increased volatility and potentially further price movement. Considering the forecast for the next week predicts continued price increases, reaching $138, a bullish strategy is warranted. Therefore, I recommend a long position with an entry price of $131. The initial stop-loss should be placed at $125, just above the support level, to protect against a potential pullback. The first target price is $134, aligning with the recent high and the forecast. If the price reaches $134, we can move the stop-loss to break even to secure the profit. The second target price is $138, based on the forecast and the resistance level. This strategy combines the momentum of the uptrend, the bullish RSI, and the widening Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, TRON demonstrates a slight upward trend. The price has been fluctuating within a range between $0.279 and $0.296. The RSI indicates that TRON is currently approaching the overbought level, with a reading of 63.9 on January 4, 2026. Considering the forecast prices, which predict a continued increase, I recommend a long position. The entry price should be $0.293, coinciding with the initial forecast price. A stop-loss should be set at $0.284, just below the recent close price and the center of the Bollinger Bands to mitigate potential losses if the price reverses. The target price should be $0.299, aligning with the highest forecast price. To refine this strategy, I'll incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, $0.294 on January 4, 2026, it suggests strong upward momentum, and the target price could be adjusted to $0.30. Conversely, if the price touches the lower Bollinger Band, $0.275 on January 4, 2026, it signals a potential pullback, and the stop-loss should be lowered to $0.279 to protect capital. This combined strategy, leveraging both RSI and Bollinger Bands, aims to maximize potential returns while managing risk effectively. The final portfolio will be 60% long position, 20% stop-loss adjustment, and 20% target price adjustment. Based on the historical data and forecast, Dogecoin shows a recent upward trend, particularly evident in the last few days of December 2025 and the beginning of January 2026. The RSI consistently rose from 32.1 to 64.1, indicating a shift from oversold to overbought conditions. The forecast data suggests a continued upward trajectory, with prices projected to reach $0.163 by January 11, 2026. Considering the support price of $0.148 and the resistance price of $0.155, I recommend a long position with an entry price of $0.141 on January 5, 2026. A stop-loss should be placed at $0.138 to protect against potential downturns, and a target price of $0.159, aligning with the forecast price and nearing the resistance level, should be set for taking profits. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently bounced off the lower band, suggesting buying opportunities when the price dips towards it. The forecast shows the price moving towards the upper band, further reinforcing the bullish outlook. Therefore, the primary strategy is a long position based on the RSI and forecast data, complemented by Bollinger Bands confirmation. The portfolio will be 70% dedicated to this long position, with the remaining 30% allocated to a smaller, more conservative strategy of buying when the price touches the lower Bollinger Band and selling when it touches the upper band, aiming for smaller, more frequent profits. This combined approach balances risk and reward, capitalizing on both the overall trend and short-term fluctuations. Based on the historical data and forecast, Cardano shows a clear upward trend, supported by the consistently rising forecast prices and the price bouncing off the 0.37 support level. The RSI values fluctuate, but generally remain above the oversold level of 20, suggesting increasing buying pressure. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the lower band, creating potential buying opportunities. I recommend a long position strategy. The entry price should be $0.383, coinciding with the first forecast price and a potential bounce from a slight dip. A stop loss should be placed at $0.37, right at the support level, to limit potential losses. The initial target price should be $0.417, aligning with the third forecast price and a reasonable profit target considering the recent resistance level of $0.414. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. When the RSI dips below 30, consider a buy order. When the RSI exceeds 70, consider selling. If the price touches the lower Bollinger Band, it's a strong indication of a potential buy, and if the price touches the upper Bollinger Band, it's a strong indication of a potential sell. The second target price should be $0.425, aligning with the last forecast price. This multi-layered approach, combining trend analysis, RSI signals, and Bollinger Band confirmations, aims to maximize returns while managing risk effectively. This strategy should provide a high-return investment opportunity for Cardano. Based on the historical data and forecast, Bitcoin Cash demonstrates a clear upward trend, consistently testing and breaching the 623 support level. The RSI indicates a move into overbought territory with a reading of 65.7 on January 4, 2026, suggesting a potential pullback, but the forecast predicts continued gains. Considering this, I propose a long position strategy. Entry price will be $633, coinciding with the first forecast price on January 5, 2026. The stop loss will be set at $623, just below the established support level, to protect against a sudden reversal. The initial target price is $668, aligning with the forecast price on January 8, 2026. To refine this strategy, I'll incorporate the Bollinger Bands. The price consistently trading above the upper band suggests continued bullish momentum. If the price reaches $668, I will move the stop loss to the center of the Bollinger Bands, currently around $595, securing profits while limiting potential losses. If the price fails to reach $668 and shows signs of weakening, indicated by a drop below the lower Bollinger Band, I will close the position at $633, cutting losses and re-evaluating the market. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH shows a clear upward trend, supported by consistently testing the 3280 support level and nearing the 3600 resistance. The RSI consistently fluctuating around the 50 level, indicating a neutral to slightly bullish momentum. The forecast for the next week projects continued upward movement, with prices reaching 3530. Given these factors, I recommend a long position strategy. We will initiate a long position at $3,370, coinciding with the first day of the forecast period. A stop-loss order will be placed at $3,280, just below the established support level, to limit potential losses. The initial target price will be $3,500, aligning with the forecast for January 7, 2026. To optimize returns, we will incorporate a dynamic target price based on the Bollinger Bands. If the price reaches the upper band of $3,410 on January 4, 2026, we will consider taking partial profits and adjusting the stop loss to $3,310 to secure gains. Furthermore, if the price continues to climb and breaks through $3,530 on January 11, 2026, we will adjust the target price to $3,550. This strategy combines the projected upward trend with risk management techniques, ensuring a high probability of achieving substantial returns while protecting capital. Based on the historical data and forecast, IOTA shows a clear upward trend, particularly evident in the recent price surge to $0.103. The RSI consistently fluctuates, dipping into oversold territory, below 30, and then rebounding, indicating potential buying opportunities. The Bollinger Bands have been widening, suggesting increased volatility and potential for significant price movements. Given the forecast for continued upward momentum, I propose a combined strategy leveraging RSI and Bollinger Bands. We will initiate a long position when the RSI falls below 30 and the price touches the lower Bollinger Band. Specifically, enter a long position at $0.0809, placing a stop-loss order at $0.0769 to mitigate potential losses. Our initial target price will be $0.0935, aligning with the first day's forecast price. As the price approaches $0.0935, we will reassess the situation. If the upward trend continues, we will adjust the target price to $0.103, based on the forecast data. This strategy combines the momentum indicated by the RSI and the volatility suggested by the Bollinger Bands, aiming to capitalize on the prevailing bullish trend. The final target price will be $0.109, considering the forecast for January 11, 2026. This portfolio prioritizes risk management with a clearly defined stop-loss and offers a potential for substantial returns given the positive forecast. Based on the historical data and forecast, Gala exhibits an upward trend, supported by the consistently increasing forecast prices from January 5, 2026, onwards. The RSI values have been fluctuating but generally trending upwards, indicating increasing momentum. Currently, the RSI is around 62.7, which is above the 80 overbought level, suggesting a potential pullback before further upside. The Bollinger Bands show that the price is near the upper band, further reinforcing the possibility of a short-term correction. Therefore, I recommend a contrarian strategy focusing on short-term pullbacks. My proposed strategy involves waiting for a slight pullback to the $0.00682 level, which aligns with the beginning of the forecast period and the upper Bollinger Band. This acts as our entry price. Given the upward trend, I set a stop-loss at $0.00653, just below the lower Bollinger Band to protect against a deeper correction. The initial target price is $0.00717, coinciding with the forecast price on January 7, 2026. If the price reaches this target, we can consider moving the stop-loss to break even and potentially extending the target to $0.00755, based on the subsequent forecast. This portfolio combines elements of trend following and mean reversion, aiming to capitalize on both upward momentum and short-term volatility. Based on the historical data and forecast, Artificial Superintelligence Alliance shows a clear upward trend. The RSI consistently moved above 30, indicating a bullish momentum. The forecast for the next week projects continued price increases, reaching $0.287. Considering the support price of $0.26 and the resistance price of $0.329, a strategy focusing on capitalizing on the upward momentum is recommended. I suggest a long position with an entry price of $0.238. A stop-loss should be placed just below the support level at $0.25 to mitigate potential losses. The initial target price should be set at the resistance level of $0.329. To refine the strategy, we can incorporate the Bollinger Bands. The price has been trending towards the upper band, suggesting continued bullishness. I recommend a secondary target price of $0.287 based on the forecast. Given the RSI nearing the overbought level of 80, a trailing stop-loss can be implemented once the price reaches $0.27. This involves raising the stop-loss to protect profits while allowing for further upside potential. The final portfolio will prioritize the long position with an entry price of $0.238, a stop loss of $0.25, and a target price of $0.329, with a secondary target of $0.287 and a trailing stop loss implemented after reaching $0.27. Based on the historical data and forecast, Pudgy Penguins demonstrates a clear upward trend, particularly evident in the recent price surge to $0.0127. The RSI consistently climbs, exceeding 60 on January 4, 2026, indicating strong momentum. The forecast data further reinforces this bullish outlook, projecting prices reaching $0.0134 within the next week. The Bollinger Bands also show a narrowing trend, suggesting a potential breakout. Therefore, I recommend a long position strategy. Entry price should be $0.0108, with a stop loss set at $0.0095, just below the bottom of the Bollinger Bands to mitigate potential losses. The initial target price is $0.012, aligning with the support level. To maximize potential gains, I suggest a trailing stop loss strategy. Once the price reaches $0.012, adjust the stop loss to $0.011. If the price continues to rise, adjust the stop loss further to $0.010. The final target price should be $0.0134, based on the forecast. This strategy combines the momentum from the RSI, the breakout signal from the Bollinger Bands, and the support and resistance levels to provide a high-return investment opportunity while managing risk effectively. This portfolio will focus on the forecast data, and the RSI will be used as a secondary indicator. Based on the historical data and forecast, Shiba Inu shows a clear upward trend with increasing momentum. The RSI consistently moving above 30 indicates weakening selling pressure, and the forecast prices suggest continued growth. The price is currently near the bottom Bollinger Band, signaling a potential buying opportunity. Therefore, I recommend a long position strategy focusing on capitalizing on the anticipated upward movement. We will enter a long position at $0.0000020. Given the support level at $90.06, we will set a stop loss at $0.0000880 to limit potential losses. The initial target price will be $0.0000930, aiming to capture a significant portion of the forecasted price increase. To optimize returns and manage risk, we will implement a dynamic strategy. As the price approaches the $0.0000930 target, we will move the stop loss to break even at $0.0000820, securing profits while allowing for further upside potential. If the price continues to rise, we will adjust the target price to $0.0000960, based on the forecast data. This strategy combines RSI signals, Bollinger Bands analysis, and support/resistance levels to maximize profit while minimizing risk, resulting in a high-return investment portfolio. Based on the historical data and forecast, FLOKI shows a clear upward trend. The RSI consistently climbed above 30, indicating increasing momentum, and the forecast prices suggest continued growth. The price is currently near the support level of $0.0000513, and the Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. Therefore, I recommend a long position with an entry price of $0.0000488 on January 5, 2026. A stop loss should be placed at $0.0000475, just below the bottom of the Bollinger Band, to protect against a sudden downturn. The initial target price is $0.0000564, aligning with the forecast price for January 11, 2026, and the RSI reaching 65.4. To optimize returns, I suggest a dynamic approach. If the price reaches the initial target, consider moving the stop loss to break even to secure profits and allow for further gains. The second target price should be $0.0000606, based on the forecast for January 11, 2026. This strategy combines the momentum indicated by the RSI, the support and resistance levels, and the volatility suggested by the Bollinger Bands to maximize potential profits while mitigating risk. This is a high-risk, high-reward strategy suitable for experienced investors. Based on the historical data and forecast, Pepe shows a clear upward trend. The price has been consistently rising from 4E06 to $0.00000720, and the forecast predicts further increases to $8E06. The RSI is currently above 70, indicating an overbought condition, but with the overall upward trend, a slight pullback followed by continuation seems likely. The Bollinger Bands are widening, suggesting increased volatility and potential for price movement. Therefore, I propose a long-term investment strategy with a focus on capitalizing on the upward momentum. My strategy involves entering a long position at $0.00000630, coinciding with the start of the forecast period and a potential pullback after the overbought RSI. I will set a stop loss at $0.00000610, just below the recent support level, to limit potential losses. The initial target price will be $0.00000760, aligning with the forecast peak and the upper Bollinger Band. If the price reaches this target, I will consider trailing the stop loss upwards to protect profits and potentially aiming for a higher target of $80.06, based on the forecast. This strategy combines the RSI, Bollinger Bands, and trend analysis to maximize potential returns while managing risk effectively. Based on the historical data and forecast, STAX shows a clear upward trend, particularly evident in the recent price surge from $0.244 to $0.357. The RSI consistently climbed from 32.4 to 72.9, indicating strengthening momentum, although it is currently approaching overbought territory. The forecast predicts continued upward movement, with prices expected to reach $0.372. Considering the support at $0.336 and resistance at $0.403, and the Bollinger Bands showing a widening range, I recommend a long position. We will enter a long position at $0.299, setting a stop loss at $0.265 just below the recent low and a target price of $0.372 aligning with the forecast. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, we'll initiate a long position. The price is currently at $0.299, which is near the oversold level. We will set a stop loss at $0.265, which is below the bottom of the Bollinger Bands, and a target price of $0.372, which is near the top of the Bollinger Bands and aligns with the forecast. This strategy combines trend analysis, momentum indicators, and volatility bands to maximize potential returns while minimizing risk. Based on the historical data and forecast, Dogwifhat shows a clear upward trend, despite some volatility. The price has been fluctuating within a defined range between $0.263 and $0.439, with a recent bounce from the $0.277 level. The RSI indicator consistently remains below the oversold level of 20, indicating a potential for further price appreciation. The forecast data for the next week predicts a continued upward movement, with prices potentially reaching $0.415. Considering these factors, I recommend a long position strategy with an entry price of $0.342. A stop-loss order should be placed at $0.315 to mitigate potential losses if the price reverses. The initial target price is set at $0.385, aligning with the upper Bollinger Band and a reasonable profit margin. To maximize potential returns and manage risk effectively, I propose a dynamic strategy incorporating the Bollinger Bands. If the price reaches the $0.385 target, we will move the stop loss to the entry price of $0.342, securing the initial profit. Furthermore, if the price continues to rise and touches the upper Bollinger Band, we will set a new target price of $0.397. The final target price is $0.415, corresponding to the highest forecast price. This strategy combines the strengths of the RSI and Bollinger Bands, allowing us to capitalize on the current upward trend while minimizing potential losses through strategic stop-loss adjustments. Based on the historical data and forecast, Bonk shows a clear upward trend. The RSI consistently climbed from 38.7 to 74.7, indicating strengthening buying momentum. The forecast for the next week predicts continued price increases, reaching $0.0000124. The price is currently near the bottom of the Bollinger Bands, suggesting a potential buying opportunity. Considering these factors, I recommend a long position. The entry price should be set at $0.0000107. A stop loss should be placed at $0.0000120, just below the support level, to limit potential losses. The initial target price should be $0.0000116, aligning with the forecast high for the week. To refine this strategy, we can utilize the RSI and Bollinger Bands. When the RSI falls below 30, it signals an oversold condition, and when it rises above 70, it signals an overbought condition. Currently, the RSI is at 74.7, which is overbought, but the price is still trending upwards. Therefore, I suggest a trailing stop-loss strategy. Once the price reaches $0.0000116, move the stop-loss to $0.0000110. If the price continues to rise, further adjust the stop-loss to maintain profits. The final target price should be $0.0000124, based on the forecast high. This combined approach leverages both technical indicators and price forecasts to maximize potential returns while minimizing risk.